This is Randy Finney with Right Side of the Chart, and this is a mid-session update for Wednesday, July 16th, 2025. It's 2:37 p.m. Eastern Time as I'm starting the video. What I'll do in this one, just go over a few charts, nothing long, nothing deep. Some of the things I've been watching, I'll get to a couple of the questions that were put out on the site today. And I can tell you, I've been struggling all day to come up with anything relevant or new or actionable to share with you guys. Even earlier today, I watched the markets had that big swoon down, then back up on rumors that Trump was going to considering firing Powell. Well, again, what's new? Of course, he denied it, kind of denied it in the press conference later on. Markets completely recovered. But I sat on my hands during that. That's nothing really technically significant happened, and it's just the nature of the modern markets nowadays. So let me go. I'll talk on that. We'll talk on treasuries, gold, silver, precious metals, U.S. dollar, natural gas, and then a couple questions on some trade ideas. I'm going to start out here with the equity markets, as I often do, and just reiterate. Well, the only thing new that I see yesterday, we did print on the on SPY a bearish engulfing candle on this daily time frame. Bearish engulfing candle, by definition, the body, which is the fat part, must engulf the body, not the shadows, just the body of the previous candle. And this one actually engulfed the last one, two, three, four, at least four candles there. We'll see. So this is exactly what I said and highlighted earlier this year on the weekly chart right here. We had a bearish engulfing candle right there on the indexes on SPY, and I stated that as an objective entry with a stop right above. This is one of a very simple pattern to trade. Who knows what the market's going to do? But what I say, you never know. There's never any certainties with anything. But what is an absolute certainty, in my opinion, or it's fact really, is that these kind of trades offer an excellent RR, whether they pan out or not. The strategy, at least my strategy is, let's go back to the daily because that's what we have it on here. You take a short position, again, assuming you believe that's where things are going based on the technical posture, the negative divergences, the volume tapering off, a lot of other things. I think it has a good shot. And so what you do, you establish a short position with a stop somewhat above that candle, ideally on a daily close, give it a little room, and that's it. So the thing is, if it pans out and works out as a bearish engulfing candle, which is a reversal stick. So first of all, you only want to look for them or act on them after a prolonged uptrend. I think it's safe to say this qualifies off the April lows. All right, so, and to quantify it for you now, from where we're at as I speak, we have about 0.62%. So let's say you give yourself a 1% stop loss, right? It gives you a little room above there, about 630 on SPY. Your downside potential, no guarantees, of course, of anything, but if it's hit, I still maintain the same long-term targets that I've had since last year. Remember, it's not as if they haven't played out. We've already hit T1, 2, and 3. This is just, in my opinion, a progression of the long topping process. We hit this third target, bounced and made a marginal new, and still very, very much, again, this is the weekly chart, my long-term chart that has those longer term trend targets. So we have an ever so slightly we haven't reversed yet, but as predicted, if we did go up to make a new high, there would be a marginal new high with negative divergences, and that new high would ultimately fail and start the next leg down to these additional targets. T7 lies all the way down here. So what I was saying a second ago, so you risk 1% to potentially make up to 44% if that final target's hit. Now, you may not think or believe that the S&P 500 can drop it almost in half, and that's fine. If not, then if you're targeting my next target, T4 or T5 down here, you're talking still about a 25% drop to T4, 28% drop. That is a phenomenal RR. But again, look, I'm going to tell you, bearish engulfings, we've seen quite a few. You know, you get them from time to time, even at tops. So they're not the highest probability candlestick at all. In other words, the probability of that trade panning out, yeah, I'm not going to give it super high odds. But again, the trades, the way that I frame my trades is typically the trades that have the very high RR, risk reward potential. Those, you know, you're risking a very small amount and your potential profit potential is very high. So you can take a lot of those, get stopped out, and only hit a few if you hold out for those long-term targets and you're making good money. Then you have the other typical swing trades I give you sometimes with a 3-to-1 or even a 2-to-1 or 4-to-1 RR. Those have a higher chance of playing out. Those usually hit their targets. Anyway, I wanted to share that. So that's what it looks like on SPY. You also have this trading range we've been in, as I've talked about. That's why when you look at the momentum indicators, this is the PPO right here in the RSI. That's why they are falling. These are momentum indicators, and they've been dropping, showing you that while the stock market has been going up, the momentum indicators have been putting in lower highs. That's the negative divergence we talk about. That's why you have a divergent high, and it's a function of waning momentum. And you can see here, so we're going sideways now, and so I added this level right here, about, give or take, it's not a hard number, about 618.37. Basically the recent lows, the bottom of this recent trading range right here. Because what this was, that was a previous breakout. You had nothing but green candles following that breakout right there above this trading range, and it took us up to this next one. All right, so let's not talk much more on that. That's what I see. We're also below these trend lines that we have here. QQQ I've added. The only other thing I've done to this chart is you also have a recent trading range, and we keep testing about this 550-80-ish level right here. So it was resistance, resistance, resistance for a few days. We popped it and backtested, 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 backtested again today. So that's a level I have price alerts. I believe I have it set. I have alerts set on quite a few. Let me do this while I'm at this. I'm going to rifle through. These are just, again, shorter term swing targets, but then that'll morph into, if we get some traction, we get down to T3. I've already commented on this. We're going to come back in. We're going to test the 200-day moving averages at that point. And if we take those out, then we have the odds will sharply increase that we're going to go down to those longer term targets. Until then, the odds, you know, aren't nearly as high as they would be if we break this level here, this zone, and get back below the 200-day moving averages. Quick run through on the big leading stocks of the NASDAQ 100. Actually, what I'm going to do for you, I'm going to do it very fast. You can pause this video. You can slow the play speed down. That's another option. Remember, when you watch any video on YouTube, including mine, go to the settings. I like to watch them at 1.5, sometimes 1.75 speed, whatever I'm watching, most things. If it's educational or whatever it is, speed things up. You can always slow it down. And so as I go through these, you can just keep an eye on the what you're going to see on these charts. This is NVIDIA. I'm going through, as I often do, the components of the NASDAQ 100 by market cap. So just keep in mind that when I start with NVIDIA, it's the only $4 trillion company. So therefore this is a cap weighted index, just like the S&P 500, meaning that NVIDIA has the highest impact on the indexes. So this level needs to go. You've got a couple of dojis sitting up here. Love to see a gap down. The bears would love to see a gap down, or of course any move down below. This is the primary uptrend line, and it's pretty well defined. I definitely have an alert set below that one. Should it come in a gap, we haven't had a big gap down in a while, but should it come in the form of a gap, it has the potential to leave an island cluster top, these two candles separated by gaps on both sides, and then take out the trend line. That would be the most bearish because it would bypass or blow past a lot of stops. I'm sure there's some long side traders riding their stops up just below this trend line right there, or maybe below that gap right there. So this is what NVIDIA needs to take out to really get some selling going in both that stock as well as the indexes. So there's your trend line, comes off the April lows. A lot of the trend lines that I have, not all, but most of them come off those key April lows. So I'm going to rifle through the rest of them. Microsoft, again, these I've gone over with you lately quite a bit. Most of these I have not updated the lines. Still, look at that. Look how many reactions. That's got to be a couple dozen reactions. Very well defined trend line, and it's just hugging the trend line. Big divergence forming. So I still think, as I said yesterday, I can see at a higher point right now than in just about any time this year, other than back, right before on the day of liquidation day, where I had a lights out level I listed and we hit it, and the lights went out in the market. Right now, this is the only time I've seen such a setup where we can have a very fast, powerful move down, that the bobbleheads will come on TV saying they don't know what happened. There'll be a catalyst, a fundamental catalyst, earnings or some report or something comes out of Trump's mouth or somewhere else. But the charts are stacked. They're all setting up. They're all just hugging this level. A lot of sentiment indicators are really low. I've been looking at short interest, down at most everything, indexes and many key stocks at or very near 52-week lows. So there's a lot there, a lot of tinder right now for a pretty sharp correction. You just need that catalyst, that spark. All right, so Microsoft, there's a line to watch. Apple, there's an uptrend line. Apple's still below the 200-day moving averages. Right there's a 200. It's been, if you look at this, Apple's been back testing the 200 exponential with the 200 simple just above it. Amazon broke down today. There is a sell signal. Let me repeat, that's a sell signal. Obviously, it'd be better to see NVIDIA break down. If NVIDIA breaks down, then you'll have a big check mark. Right now, you have a check mark, but you know me, I like to see multiple check marks on the MAG 7, 8, 9, 10, whatever you call it, the top 10 stocks and the NASDAQ 100. But Amazon, as well as Meta, which I'll get to in a second, have broken down today, giving me sell signals. So another translation, that's a short on if you want to. Check again the odds until the markets break down. We take out the levels I started out with on QQQ and SPY. This could just be a whipsaw, but you can see a clear break below the nice clean up trend line right there on Amazon. Also a back test of the trend line, the primary trend line that was already broken. That trend line comes all the way off from the 2023 lows. I'm talking about this purple trend line here. And as you can see, again, it comes off the beginning January 2023 lows. And I went over this the other day. It gave you this little wedge type pattern. So that one's broken down. Market hasn't gotten the memo because, again, it's one of several market leaders that needs to break down. Alphabet, no sell signals there. I don't have a great trend line. I'm not going to force it, but the common theme here, negative divergences, building. Again, when we bounced into my re-entry bounce target zone in the 200 days a few months back, we did not have, as I mentioned, negative divergence. This is the first time virtually across the board on the indexes, SPY, QQQ, IWM, mid caps, all of them, and most of the market leading stocks that we have negative divergence on the daily chart. First time since the beginning of the year. We all know what happened in the beginning of the year. Stocks like Alphabet and others fell 32%, lost a third of their value. And I see a similar setup right now. Meta broke down below the trend line that I gave you recently, and this little 707.84 price support level. It's not very far below it, but if we can build on these losses, whether today or tomorrow, like I like to say, the redder the better. That was it was resistance here. We broke out. We've been back testing it, and it went today. And that follows the breakdown and back test of the uptrend line right there. You see right there. So that's two of the MAG 7. Broadcom, no sell signals, nothing there yet. I still like it as a longer term short, even though it is ever so slightly exceeded that suggested stop I gave you above 270. So we'll consider it technically an inactive trade, a stopped out trade, but it needs to take out this yellow uptrend line right here. And that's the one I'm watching on that one. Tesla needs to take out this white uptrend line right there, still above it, following that divergent high. Netflix already broke down, triggered an objective short entry there. It's been drifting lower. But again, these guys, birds of a feather, flock together. The Mag 10, it's very unusual to see any of them go down very far without the rest of the lot due to the heavy indexing. They have such a high correlation because of that. Costco, recently broke down that primary uptrend. Well, not primary, but this key uptrend line right here. Broke down, then back testing. And I often talk about this. Problem with shorting a back test is on an uptrend line is it can keep back testing and you keep going underwater because there's a positive slope, meaning prices go up and up every day to back test. What I like to see is a rejection, an impulsive rejection following a back test. That's usually when you know you're good to go. And that's what happened. This one's been moving lower. You had this little minor trend line right here. Just broken, and today this one has it's testing right now as I type or speak, I'm sorry, the 200-day exponential moving average. Now it had a couple pierces through there, but it snapped right back above there before. Remember, we had a lot of volatility early in the year. Just one to watch right there. That's Costco. ASML and the chips are getting we are on a sell signal in the chip sector. This is ASML reported today. Nice big smackdown. And you can see there, again, first divergent high, textbook bearish rising wedge pattern, just like you had a wedge pattern right here with a divergent high. When it broke down, that gave you a drop of 22% in the stock. Today, we're down about 8% now. We hit a perfect tag. You can see this blue line right here. That's the 200-day simple moving average and excellent price support right there. There's a big old gap, and so we hit support, dual support, and either way, but it's a breakdown. And so now your next objective short entries or add-ons on this one would either be a kickback to about this somewhere in here. Let me lower that line somewhere about the 778 level, or a break of today's lows, which will take out that 730 support and the 200. Let me just show, well, I'll get to SOX after this. Let me go through a few others. Cisco already broke down after putting in a big divergent high, clean trend line break. So like I said, a lot of these stocks, T-Mobile peaked back here in the beginning of the year. It's long since been moving down. It's below the 200-day moving averages now. AMD, one of the last holdouts in the semis right now. But look at that big divergent high. And a nice clean trend line just waiting to be broken. So on that one, or the chip sector, if you want to wait and be the second mouse that gets the cheese, wait to see AMD break down. Of course, NVIDIA as well. AstraZeneca peaked back in 2024 and been moving lower. There's a downtrend line. I'm just kind of hitting on all of them. Divergent high on LIN. Previous divergent high was right there. We got that big drop, and now we have this divergent high right here. Intuit just put in a divergent high recently and then broke down below the trend line. It's been moving lower, needs to take out 747.50. And then you can see my targets here and here, big old gap to be backfilled, and big steep negative divergence. Again, that's a common theme. If I don't mention it, just take a look. You'll see on most of these stocks, here's a trend line that ultimately this one will come and visit. Probably this year would be my guess, primary uptrend line. If so, that would give a downside. Remember, the trend line is going to come in higher if and when it's hit. That'll be about a 20-21% drop and into it. Texas Instrument, one big chip company, beautiful. I mean, come on, guys. This is a beautiful bearish rising wedge pattern. Look how well defined. This is the most important line, your uptrend line, right? Top line is just your divergence line that shows you the indicators are making lower highs. And then boom, broke down yesterday, the day before, it broke down on Monday, back tested and traded sideways for a day, and boom, right down to that first support level there. This, once that breaks, I can give you targets if you're interested. I'm just showing you that we're firing off, especially a lot of the chip stocks are breaking down. Booking.com just cracked off that divergent high, just broke the trend line. Pepsi is still a long trade idea. I still like this one. This is where I think the safer play is right now than chasing, high flying, especially the chip stocks that are starting to break down. we hit T1, and there's a good example. It's a resistance, and we've been bouncing. You could have re-entered on pullback to S1, which is first support level, was previous resistance. We entered it right here, hit my first target, been moving sideways, so we need to pop above T1. That'll open the door to T2 and then T3. All right, I could go on and on and on, which I'm doing now. Qualcomm, again, the common theme here is the semis are breaking down. Let me just loop over there and show you what SOXX looks like. This is SOXX, one of 3 big semiconductor ETFs. The others are XSD and SMH. This was a nice, clean, bearish rising wedge. Again, this is the first divergent high we've had since this divergent high right here. And we were short off that one. We had targets on right there. 6 and final target hit. That's when we covered all shorts. We're going long in the beginning of April, right off the lows there. And also coincided with that final target I gave you out of 1, 2, 3, 4, 5, 6. And so it's come full circle. And again, that short was based, that previous short was based off somewhere after this divergent high right there. And again, this is the first time since the middle of last year, we put in a divergent high. That previous divergent high took the semis down, the whole sector down 45%. And finally, we do have, it's been going up, 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 breakdown on Monday, back test yesterday, rejection today, which I like to see. And that's it. So keep an eye on the semis. It's an objective short right now. Will be way more objective, or an all-in. Doesn't mean your entire portfolio. When I say all-in, it just means whatever part you want to allocate to a semiconductor short. You still have a very resilient bid in the broad market. I don't think it's all in on anything short right now until the major indexes start giving us some pretty good evidence of a trend reversal or a sell signal. But you can certainly start to get into these. Remember, nobody wanted to short here. Most people don't. They all want to buy. They all want to sell here. Nobody wants to cover and go long. That's just that's what we were doing on the site, and this is right now. Nobody wants to go short, I'm sure, because of the resiliency of this trend. But the technicals say, look, there it is. It's a clear breakdown, and also at resistance. By the way, this is that was support right there, broken, back tested, and so we're right at support right now. There's NVIDIA. I already covered that. I'm just going through the components of the semis. Taiwan semi broke down, back tested, marginal new, and still divergent high. Just take these divergence lines, drag them on over. Typically, the bigger they get, usually the bigger the ensuing trend change when it comes. There are no guarantees, as I often say. Who knows? Sometimes the divergences get burned through. But unless that happens, this is a similar technical posture as we had back here. There's ASML, already covered. AMD, covered one of the stronger ones right now. Texas Instruments, I already covered. Qualcomm broke down, bearish rising wedge, divergent high right here. There's your breakdown. And it's at just kissed that first support target I had. You can see I created that line back in 2021. Haven't touched it since 2021 either. It was updated then. So it's been support for a long time, a very, very good support level. And if and when it goes, now we're already on a sell signal, and we took out the 200-day moving averages too. This is a big one, by the way. This is Qualcomm. When it's below the 200s, you're in a bearish trend, and this is a semi that's been sucking wind. When you're above the 200s, you're in a bull trend. When you take them out and you're below them, and that's what happened. We back tested recently on this move up. And so far, we're getting rejected. Not by a lot. We've had a few rejections, but we are below them. And again, there's that divergence. You can see I had the divergence line drawn here. I just didn't have it on the indicators. All right, Applied Materials, break of the minor trend line. All right, Micron just broke down the uptrend line. I'm going to move on. Let me go to the other things here. Let's talk about what happened today, and consider today. I consider it a litmus test for Trump. We don't. What's Powell's term? I think it's up in May, right? If not mistaken. So one way or another, he's gone. Trump's just trash talked him plenty, and if he can, he said if he can get rid of him, on the the remodeling of the Fed facilities is doing. If he can find some improprieties, which I doubt he will, he'll fire him then. But who knows? Trump, if he can, he will. The problem is most people say he probably can't. So I think we'll have Powell till then. However, we know that Trump wants to, well, absolutely. He would never fire Powell if he can't replace him with a minion, with a puppet that he's got his hand up his ass. We know that. That's a given. Anybody that Trump appoints, whether he fires Powell or Powell's term is up, is going to be a Trump minion. So let's see what the market has to say about that. All right, so I was watching today, saw the volatility occurring, and let me move this up. That's not what I meant to do. Let me move that down just a hair. Go back here. TLT, let's go to 1 minute. Okay, so if you're not aware, I even watch, it's funny, because I saw the volatility. I didn't know what the news was, so I turn on CNBC, and I can see, one of the female reporters, she was flustered. She said, oh, yields have shot down because of that. And then she's like, oh, no, wait, yields have gone up. And she was all confused. And what happened is, so again, it's very obvious. If Trump were to fire Powell, and that was the rumor initially, that's what caused the stocks to drop. Short-term yields, here, I'll start there. Short-term yields shot down. This is SHY. If you want to get an idea on the short term, that tracks a 1 to 3 year Treasury bond. So short term, and you can see right here, that news broke at 11, and it was right here. So you had this sharp run up. That's this thing hardly moves. It's just such short duration on these bonds. There's not a lot of movement, but you can see from the 11 a.m. mark, it shot up, meaning short-term yields dropped. That's what she was referring to. And then she didn't realize that the Treasury bonds from 11, you can see right here, the peak was at 11:45, about 11:40, when I think the press conference came on. He said, oh, no, well, I'm not really going to fire him, and if I can, I will, but I'm not. And then if you look at TLT, it went the other way. You can see TLT dropped, which means, remember, yields go opposite bond prices. Right here is 11 o'clock hash mark. Huge drop. That's a big drop. So what happened is, and this is my interpretation of this, the market instantly thought if Powell's getting fired, Trump's going to put a puppet in place that he can control, that'll be at his beck and call. That was a 1.6% drop. That was a huge surge in long-term yields. That's why that reporter got flustered. So what you saw happen, again, just to be very clear, short-term rates went down because, yes, whoever Trump puts in place will cut rates. So they, at Trump's command, and let's not even get to the fact. And long-term rates shot up. Politicizing the Fed would be, people a lot smarter than me, Jamie Dimon and some others have chimed in. That would be a huge disaster, taking away the Fed's independence. And of course, then you've got Trump. He'll just take rates down. He doesn't realize they will lose control of the long end of the yield curve. So again, this, guys, to me, one day, even 45 minutes doesn't make a trend, but it shows you what the market will think if Trump gets his way and he has a minion that he can put in place in the Fed, whether it's now or after Powell's term is up, because they will take rates down. That will be it will be inflationary, number one, stimulative for the economy in the short term, however, crippling not necessarily, because long-term rates can surge. And remember, the 10-year is going to come somewhere in the middle. Corporations are going to borrow somewhere in that 5 to 7, 8-year range, so somewhere in the middle of the two. But you'll have the long end of the yield curve will be out of control. Treasury bonds will most likely break to multi-decade highs in yields, long-term Treasury bonds. And then that's also going to cripple the U.S. government, because even though we've been issuing more on the short end of the yield curve, we still have a lot of long-term debt that has to be serviced, and you still have to issue. They can't just go on forever issuing short-term Treasury notes and bills like Yellen was doing and Bessent's doing now. All right, so that's it, guys. I just want to tell you what's going on in the world of Treasury bonds. And let's not forget, let me say it every day until we get away from here, we are within spitting distance of new multi-year, even multi-decade highs in the long bond. So watch that. As I told you that we broke this uptrend line, we've been moving lower today. We're still down on the long bond today. TLT is still negative. So something very, very, very much to watch. Of course, the dollar was all over the place today as well on that. You can see the same thing. Dollar shot down. Why did the dollar drop when that news broke? Because if Trump does get a minion in there that will bend to his will, they're going to make lower rates. Any country, if their rates drop down lower relative to other countries' rates at any point in time, relative to what their currency is going to drop because of that. So when we have higher rates or we're raising rates when another country, other big countries, particularly the euro, isn't, then the dollar rises, and so that's why the dollar dropped down. That's how forex trades. It's all relative to expectations, not actual. There was no change in rates or anything the Fed did today. And then once he walked it back, things returned back to where it was. But I want to just show you. So I remain right now, for technical reasons, bullish on the dollar. And you can see I've added, the only thing I've done to this chart is added a trend line for you right here, an uptrend line. And we held that today on this is all that matters on a daily chart right here is the fat part of the body. And so that's where we're still above, walking up that uptrend line right there. This yellow line, remember, is what I gave you for the falling wedge target for this bullish falling wedge pattern. That's the technical measured target right there, that bullish falling wedge. Remember, that was long-term support. And then this is still my second target. So if this happens, which is still my preferred scenario, I don't see any other reason not to. I'd like to see the PPO cross back above this zero line. Then that would indicate an even stronger trends going on in the dollar, and that will be bearish for gold, silver, and GDX. They were also all over the place today on that news because of the dollar, obviously. All right, what else do I have for you? Let me get natural gas. Let me give you that. This is the NG, the futures. It's a bullish falling wedge I gave you recently. Positive divergence. There was our breakout, and we've come close. That I have different targets, similar but a little bit different on the futures and UNG, and we effectively hit that. Came very close to that 362, 3627 level. Here's an uptrend line to watch. We just hit it, pull back. So I think we'll probably get one more thrust up. I would have to point out, I'd be remiss not to, we have some negative divergence, but I still maintain the longer targets. If we break this trend line, we're probably going to come back a little, and that might be an objective long entry add-on there. Re-entry, somebody told me, for example, and I'll get to the comments in a second, they took profits at T1 on UNG, or T2, I'm sorry, T2 yesterday. UNG, that was our long entry there. We hit my first and then second target. Little pullback today. And you can see the same thing there. You have a little uptrend line. We can continue to walk up. Again, pullback or not, if we do get a pullback, ideally down to, but not below this level. Let me add a line right there, and I'll try to remember in updates. That I wouldn't add below that. I would add down to it, and that's about 1462. I'd prefer not to see it get there. What I like about natural gas is she's a trendy little sucker. Usually when she breaks out of a bullish falling wedge, she doesn't let the shorts out or the longs in. She does these quick rips. So I've always called it a trendy little sucker. Not always. There's periods of consolidation and zigzag, but quite often she's full throttle up or full throttle down, right? And so there are times that I'll usually just sit tight, ride out the pullbacks. And, if there's a good chance I think there's going to be a pullback, I'll take partial full profits and then recycle back in. But I'm sitting tight for now. Right now, it's on that trend line, and I think we can continue on up. And I still maintain these targets. But again, consider your stops. Maybe somewhere not any further below, not much below that 1462 level. And speaking of that, let's go to the questions. Okay, this is from today. So, somebody scaled out a half. That's in response to the UNG trade post I made yesterday. VIX knee-jerk reaction. Yep, likely to fire Fed Chair Powell soon. And then, of course, beware of any backpedaling comments. Good call, Blueberry. That's exactly what he did. He's a blowhard. Trump, I'm talking about. I just so happen to be watching. Okay, Okay, somebody made. Yep, Herman Munster, quick profit in SQQQ. Good deal. Here we go. Did shorts trigger in SHAK? That's Shake Shack. In NRG, I had alerts go off on them. Oscar's been frustrating. Let me start with Oscar. Oscar stopped out. Remember, Oscar and MOH, I believe I already covered this. If not, yes, I did. In the last update, and you can click under this post. I'll put the ticker. I always do. The tickers I cover in any videos or static posts. And in the last update, when we were back testing here, I raised the stops. Remember, we entered Oscar. Oh God, where did we enter? Well, we made about, I think we were about 30% profit when we hit T1. We got close to T2. Then we were back testing here. And in the video, I raised the stop. Our initial stop was somewhere here. Again, I'm trying to remember where exactly we took it. You can, it's all on the site. But I'd raised the suggested stop because I to put it somewhat below if we failed a back test of this level, which we did. Now look, if you're in it, I will say this, and you stuck it out. This is even much better support. I would consider a stop below that S1 level, maybe on a solid daily close below it. This one still has the potential to get up and run. That support, but we got knocked down here. Remember, it was more of a systemic thing in the whole sector. That MOH got stopped out too. I gave you a suggested stop on a daily close below 235, which was hit on the July 7th right there. There's a solid close below 235, and it's just been going lower since. And that I say that because it's a healthcare plan company, so in the same sector. Now on Shake Shack, SHAK, and the restaurant stocks, I gave you those as a short trade the other day, and this is Shake Shack. So yes, absolutely, that was the bearish rising wedge pattern I gave you with the divergent high. Remember, we had a divergent high back here. I covered the restaurant stocks back then. We've had quite a few trades over the years. I go long and short this sector. That was a divergent high right there with a breakdown and a back test, followed by a roughly 45% drop. This is all day long. That's a break of the bearish rising wedge pattern, again following the divergent high. If you're in that one, I can tell you right now, I'm going to give you some targets. We'll have maybe a little minor, that's some support there, more of a target zone. I feel better on this one. I would hold out for that for first. I think that's the first target, 130, then 123.50, bottom of this trading range. You can see we had this little trading range here. And then I'd have to move some of these lines around. These are old lines. I'm going to do that for you right now. So right there, max target right now, 105.38. Let me just put that so I remember if I revisit this one. But remember, we also have, there's an ETF if you want to keep it simple and spread your bets, not have to worry about earnings in any, and that's to be determined. I may extend that target there, that max target. EATZ, as I told you, is the ETF for the restaurant sector. We had that divergent high. I gave you 6 targets. 1, 2, 3 was hit, almost 4. But as you recall, stated in the comment section, on the morning of the very lows of the market, no more shorts, covered them all, going full long. That includes everything here. So all these previous trades from back here in the beginning of the year or late last year, they were truncated because when those targets were hit, that was time to cover for all the reasons stated back then, that we would bounce. So now going forward, I think these are still targets for the next leg down. We made a marginal new, ever so slightly, but still divergent high, even bigger divergence, the same divergences that we had here. And on that marginal new high that finally gave us that bigger drop, have only grown larger. And more recently, this one broke down there. I was doing the video right here. We had that bearish engulfing, then the trend line break, and we've come down to that first target right here, which is about 29.56 plus the uptrend line intersecting support. And so that needs to break. And then that should take us down further. What was the other one? NRG. NRG Energy. I must have covered that one for you. I guess on July 1st, divergent high. Had some support right here. That support's been taken out, and I would have given, I guess, these 2 targets right there. So, Yeah, it's not. I'm not in this one, but I guess I covered it not even a week ago, and that's it. We've taken out that level today, the 147.75 support, and that should open the door to drop down to 136.60. Always cover a little bit below. That's the top of this gap right there. So if the actual gap is at, what is it at? I'll tell you exactly. Low 136.95. Yeah, it's about 136. You can cover around there, give or take 136.60. And they usually buy the initial pullback to the top of a gap, and then the gap once entered, which I expect, is usually then backfilled. So that would take you down to about 120.42. I think that's it. Let me just refresh this, see if any questions have been added to that. Nope. I think I've got them all. If there's any that I missed or back further, let me know. Nope, looks like I got everything. Okay, guys, that's it. Again, not much else to add other than there's a lot of levels to watch. A lot of, and it's not just the U.S. markets. I was also going through the international markets, which had a pretty strong game of catch-up recently. Canada also, EWC put in a bearish engulfing candle and has this nice little trading range right here, support about 45.90. And if that breaks, that's going to trigger a sell signal and most likely bring Canada down, which usually follows the U.S., give or take. And again, I know I sound repetitive, but it's worth repeating. This is the first of time we've had a divergent high since back here in the end of 2024, and that was followed by a drop on EWC, iShares Canada Index ETF, of 15%. And that was preceded by this divergent low right there and this divergent low. So these are, this is swing trading. Divergent low, rally, divergent high, drop, divergent low, rally, divergent high, drop. All right. We just need to get those bumps, that little nudge, to get especially, got to kill NVIDIA. Until you kill NVIDIA, put the knife in the steely beast. The whole Eagles song, they just can't kill the beast. You got to kill that beast. When that beast dies, again, a lot of semis are breaking down already. So I think it's a matter of time. And then when NVIDIA finally buckles, it should bring the whole house of cards down with it. All right. Till then, more of the same, guys. Just a slow grind fest. This is what the summer doldrums are like. Mid-July, volumes are low. We just need some kind of catalyst. To me, the charts are saying that it's coming. Something's going to come, and it's probably going to be a pretty swift reversal when it finally does, based on the technical posture and low short interest, bullish sentiment readings, and all that other stuff. I'm going to wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.